actually continue the current situation and can expect the stock market to grow by 3 to 5%. When the president was a Democrat and the Congress was two-headed, the markets grew by 13.6% a year. The probability of the fourth worst-case scenario for the markets is pretty high. Welcome to the Coin Post. The US presidential elections are coming up, and they're gonna have an impact not only on the political, but also on the economic situation in the world, especially the stock market. It's believed that Trump's victory could lead to even stronger stock growth, but his opponent, Biden, will on the contrary cause financial market collapse. In fact, it's not that simple, and it's quite possible that under Biden, stock prices will rise even more than under Trump. But to do so, there have to be certain conditions, and it's necessary to look not only at who the president is, but also at the balance between the Republicans and Democrats in Congress. Basically, there are 4 scenarios of post-election political power sharing in the US, and each will have an impact on the stock price. The most unbelievable one you'll hear at the end, so watch this video till the end. Now, check if you're subscribed to the channel and go get your notebook with campaign promises. Let's start. The first scenario involves the re-election of Donald Trump as the president, with Congress split between the two parties, Republicans having advantage, and Democrats getting more seats in the House of Representatives. According to statistics, if a president is running for a second term, he usually wins. Only polls in the United States disagree, according to which Biden is 7 points ahead. But the poll is not a vote. Besides, in the 2016 election, psychologists promised Trump a defeat, but he became the winner. In this case, he will actually continue the current situation and can expect the stock market to grow by 3 to 5%. This will be achieved if Trump continues his policy of reducing the tax burden, and also due to maintaining the Fed's liquidity flow, as they are unlikely to change the current economic course. There will also remain risk factors in the market, such as the intensifying coronavirus pandemic and the new, or more precisely the old, because it never ended, trade war with China. But as recent months have shown, investors learned to ignore both factors, and the authorities are doing their best to avoid a second lockdown, because the economy is already in recession, and it will be a priority. And people can get sick, it's not like it's their first time. So this was the most stable scenario for investors, but not the most profitable. And we're moving on. The second scenario involves a triple victory for the Democrats, for which Biden must become president, they take the Senate majority, and retain their dominance in the House of Representatives. As I said at the beginning, Trump assures us that the stock market will collapse then. But let's not forget that for the sake of victory, Trump could say everything. I mean, Twitter does mark his messages as misleading for a reason. Statistics show that when Democrats gain triple power, stock prices are actually about 2 or even 5% lower within the months after the election. But already in December, growth is back and the average S&P 500 index grows by 3%. And in 4 out of 5 presidential elections, the stock market gives a 10% return. In general, the United States had 22 years of Democrats simultaneously controlling the legislature and the executive authority, and during those years, stock price went up 77%, averaging almost 10% a year. It's believed that Biden will begin the recovery by raising corporate taxes. So those of you who believe that Apple and Facebook are too greedy, your choice is Biden. But you can't expect a high tax increase in the current state of the economy because the Democrats know very well what the economy is like. And the business that operates on the contrary needs to be supported. With China, however, the new power is likely to settle quickly, bringing the long-awaited peace to the market. Bottom line, Biden is not a bad option at all from an investor's point of view. Next, I'm gonna tell you a scenario that might bring even more profits. But first, give this video a thumbs up as we're halfway through. The third scenario implies Biden's victory again, but at the same time the Republicans retained control of the Senate, and so we get the division of powers between competing parties. Such a political balance of power would mean that even if the Democrats wanted to abandon tax cuts, the Republicans in Congress wouldn't allow it. On the other hand, a change of leadership in the White House would ease external political and trade tension. After all, the US is like a compass for many countries, and when the world leader attacks all of his partners in Europe and NATO allies, it significantly increases the overall level of tension, which doesn't benefit the stock market. Statistically speaking, the previous Democratic-dominated scenario showed an average stock price increase of almost 10% per annum. When the president was a Democrat and the Congress was two-headed, the markets grew by 13.6% a year. I would add that this scenario doesn't rule out that in November, the stock market might have a slight correction due to fears of president change. But in the long run, it has to be the most profitable. If by some incredible coincidence you haven't subscribed to our channel yet, you can fix this right away and click the bell to be the first to get notifications of fresh episodes. And I'm moving on to the last, fourth scenario, which points to a possible stock market crash. It's probably the worst option, both for the US and the entire world, because Japanese, Chinese, European, and other stock indices can be trading however they want. But if the S&P 500 drops dramatically, all the global markets are gonna repeat the movement. So worst of all is if the US doesn't have a new president after the election. That is, neither side admits defeat, and there will be a long process of recount and litigation. In 2000, when the voting results were officially established only by a Supreme Court decision on November 12th, in the first month after the election, S&P 500 shares got 10% cheaper, and companies traded on Nasdaq lost 20% of the value. At the moment, an increasing number of experts are warning that these elections will be difficult and that no one will want to lose. Indeed, candidates go very close to each other, so every vote counts, and the losing party wouldn't accept the election results and demand a recount. Considering this scenario, Trump is the one to blame, because it's clear how much he wants to remain president. He constantly criticizes the postal voting system and even suggested postponing elections until the coronavirus problem was resolved. In the latter question, he wasn't even supported by his Republican colleagues because US presidential elections are sacred and no one's allowed to reschedule them. It's fair to say, though, that Biden's headquarters still have the same reasons to disagree with the election results. And so, the probability of the fourth worst-case scenario for the markets is pretty high. And if you add to that the economy recession and the spread of the coronavirus disease, November has every chance of surpassing March collapse. Share in the comments how likely do you think is the fourth worst-case scenario for markets. And that's it for today. Thanks for watching. It's the Coin Post channel. Subscribe and get enlightened.